Today we're talking about the three types of income, known by the richest 1% as the three ATMs. We're all familiar with the first ATM, active income. As employees, this is our primary and often our only form of cash flow. We earn this money by trading our most precious asset,
Precious!
our time. And we do this for a steady paycheck.
Woohoo!
And the illusion of job security. And so the game begins. 40 hours a week, 50 weeks a year, 25 years of service. This is the story of a wage slave. Wage slaves pay the highest amount of marginal tax, upwards of 46%. Let's look at Stanley's monthly expenses. Notice the one item missing on the list. Well, it's Stanley. He's so busy paying everyone else that there's nothing left over for him. Stanley lives paycheck to paycheck. The biggest enemy to Stanley's success is his structure. As long as Stanley relies on his wage slave income, he will remain financially trapped. He's banked on earning only active income, and that is only income generated by his own sweat day after day. He works 2 weeks to get paid once. Stanley needs to build a bridge. Stanley works 50 hours a week to build his boss's dreams. But if Stanley were to commit just 5% of his time, or 2.5 hours a week, to build his own passive income, he'd quickly build his bridge to financial freedom. Then Stanley would discover that by slowly increasing his 5% activity to just 10%, both his active and passive incomes would begin to soar. And the formula takes on a life of its own. In just 6 months, Stanley will become financially empowered. This is how Stanley quietly builds his bridge to a lifestyle by design, while keeping his current job. Now, let's think about your situation. If your boss has all the control, why not become a boss? Wage slaves, as we said, pay the highest marginal tax, upwards of 46%. They work, have taxes deducted at source, pay their monthly expenses, and have nothing left over at the end of the month. Sole proprietors earn income, qualify for tax deductions, invest in assets, and then use those assets to pay down their liabilities. Their marginal tax rate is only 34%. Let's go back to Stanley's expenses, and we'll compare his situation as a new sole proprietor. Notice Stanley now qualifies for significant deductions, which will free up future cash flow. This advantage could be used to pay off his debt, invest in his portfolio, or be allocated towards his 3 wishes. Next, Stanley will learn how to create a third stream of income through the creation of an investment portfolio. In Canada, we are encouraged to create multiple streams of income by implementing 3 different types of ATMs. Earned income, taxed at up to 46%, passive income, taxed at only 34%, and portfolio income, in some cases, taxed as little as 0%. Stanley is well on his way to becoming an automated entrepreneur. In just a short time, Stanley will earn his freedom wings, and you can too.